China has received some excellent news in 2024. Recently, CNOOC discovered oil in the Bohai Sea that is equivalent to approximately 100 million tons of oil. More than 9 billion cubic meters of natural gas and 20 million tons of crude oil might be produced from the new field. This is a component of China's attempt to boost local output in order to fulfill the substantial demand for gas and oil that the nation's explosive economic growth has created. These initiatives have been led by state-owned businesses like CNPC and CNOOC. Finding the Bozhong 26/6 oil field in the southern Bohai Sea is significant, according to Xu Changgui, CNOOC's deputy chief exploration engineer. It is the largest metamorphic buried hill oil field in China, with reserves estimated as 100 million tons. According to the CEO of CNOOC, the business will continue to scour the Bohai Sea off the eastern coast of China for enormous discoveries. According to the corporation, its main objective is to search for mid to large-sized oil and gas reserves in the Bohai Sea. They added that they are dedicated to seeking out fresh chances for offshore gas and oil production. When CNOOC discovered the first offshore shale oil and gas resource in the South China Sea last year, they made history. According to analysts, China's onshore shale reserves are typically located in geologically challenging strata, rendering their development prohibitively costly. Another big state-owned business, CNOOC, also made an important discovery last year. Up to 1.7 billion tons of crude oil could possibly be contained in the Tarim Basin finding. Now, China discovered its first offshore shale oil and gas field in 2023. In July 2023, oil and gas were successfully produced from a shale exploration well in the South China Sea by China's state-owned oil corporation, CNOOC. China's first offshore shale well, the Weiye-1 Wildcat well, may significantly alter the country's dependency on gas and oil imports, according to CNOOC. It is estimated that 8.76 billion barrels of shale oil are present in the Biabu Gulf. In the meanwhile, CNOOC regards the Wildcat well, which is producing 20 cubic meters of shale oil and 1,589 cubic meters of natural gas per day, as a commercial discovery. Lin Boqiang of the China Center for Energy Economics Research expressed doubts about the prospects for shale oil extraction because of the difficult technical procedure and high production prices. China is the only country possessing more than 30 trillion cubic meters of potential shale gas, but it has had difficulty utilizing the resource. So far, all production has taken place on land. Because of its high break-even point and unfeasible returns, unconventional oil production accounts for less than 1% of China's total crude oil output, according to Wood Mackenzie. To make shale oil extraction more feasible, Chinese national oil companies, however, are spending a lot of money on new technology development. CNOOC asserts that China's first offshore shale discovery was made possible by their most recent technological innovation. Using their own technologies, CNOOC's exploration department chief claimed that they had successfully conducted autonomous exploration and development of China's offshore shale oil and gas resources. He added that it was demonstrated by the success of the first offshore shale oil drilling. In addition, CNOOC's profit in 2023 hit a record high. In March, CNOOC declared that the high price of gas and oil in 2023 had contributed to its financial success. With 623.8 million barrels of oil equivalent produced, the business also surpassed its own record for gas and oil production. Thanks to its ability to profit optimally during periods of high oil prices, CNOOC's earnings for the previous year doubled to $20.6 billion, or 141.7 billion Chinese yuan. In 2023, CNOOC's total revenues reached $61.3 billion, or 422.2 billion yuan, a 71.6% increase over the previous year. While the average realized price of natural gas climbed by 23.5% annually to $8.58 per thousand cubic feet, the company's average realized oil price increased by 42.3% to $96.59 per barrel for the year. Additionally, CNOOC said that their all-in cost was $30.39 per barrel of oil equivalent, significantly enhancing the company's cost competitiveness and relieving some of the pressure from rising commodity prices. In 2023, the company's net proven reserves increased to 6.24 billion oil equivalent barrels. Additionally, they replaced more reserves than they utilized, yielding an 182% reserve replacement ratio. The business has 10 years' worth of reserves. CNOOC achieved record profits and had a fantastic year. However, China's largest oil corporation, CNOOC, revealed lower net numbers for 2023. They held China's economy back last year because of the COVID lockdowns. The company's net profit for 2023 was $9.64 billion, down from the $10.47 billion it earned the year before. The lockdowns reduced the need for fuel, which had an impact on CNOOC's earnings. Reduced chemical prices had an impact on refiners as well. In the final quarter of the year, Sinopec's chemicals division lost money, as reported by Bloomberg. And now, in 2024, CNOOC plans to produce as much oil and gas as it has ever produced. CNOOC declared that it would raise its output goal for 2024 by 8%. A record-breaking 650 to 660 million barrels of oil equivalent would be produced as a result. CNOOC produced about 620 million barrels of oil equivalent last year, above its target production of 600 to 610 million barrels. The business has now released its annual strategic perspective in a filing to the Hong Kong Stock Exchange. Zhou Changgui, the CEO of CNOOC, has declared that the company's goal is to increase production by 6% on average annually by 2025. It is anticipated that the corporation will generate 2 million barrels of oil equivalent per day by that time. By developing local gas fields like Bohai Sea 21-1 in the South China Sea and gas reserves in international projects, CNOOC hopes to enhance its share of the natural gas market. They want to see more condensate and gas development in Guyana after making a good discovery of natural gas in Gabon. Zhou did not, however, disclose any more information. This year, the corporation intends to spend between 100 and 110 billion yuan, or $14.8 to $16.3 billion. However, this is a little less than the record-breaking 105.7 billion yuan spent in 2014. In 2024, CNOOC intends to start up 9 new projects, including Payara in Guyana, Bozhong 19-6 in China, Lufeng 12-3 in China, and Mero 2 in Brazil. This year, the business hopes to generate an unprecedented 650 to 660 million barrels of oil equivalent. And in response to the government's desire for supply security, CNOOC, one of the most economical producers in the sector, has emerged as China's main source of crude oil. The parent firm of CNOOC Limited, China National Offshore Oil Corp., declared that it raised its domestic crude oil production to 52.04 million tons last year, an increase of almost 7%. More than 60% of China's entire rise in oil output may be attributed to this growth. Additionally, CNOOC is accelerating its investigation of shale oil in the South China Sea's Biabuan Basin and coal seam methane drilling in the northern Chinese Ordos Basin. In addition, CNOOC reaffirmed its pledge to devote 5 to 10% of capital expenditures to low-carbon projects, with an emphasis on offshore wind energy. It made it clear that it has no intentions to buy any other energy-related companies, nevertheless. In addition, CNOOC pledged to keep its dividend payout ratio at 40% or above through 2025. What are your thoughts on CNOOC's new oil discovery? Let me know down below. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.